Global Advisors joins us now. Good morning, Randy. Good evening, Randy. Thank you very much for staying up for us. I don't know if you looked very closely at the finance minister's announcements yesterday. There was a whole lot of credit guarantees given to the medical sector. The loans have to come from banks, but the government is underwriting a large part of that loan. Do you think the mid-cap space has more legs to run in India?
Let me say two things first. Thanks for having me back again, Lata. I really appreciate it. I think the government's looking for ways to stimulate the economy without giving too much stimulus. I think some of these credit guarantees, et cetera, are one way. I think down the road, another way they may help in the financial sector is they may create a bad bank, because non-performing loans have risen for some of the Indian banks. And I think the government's going to want a way to clear that out. With regards to the small and mid-cap stocks, they have been doing better than large-cap stocks in India. And what's really driving that is that when investors are optimistic about the economy, they tend to migrate to more cyclical and smaller stocks. So I think that's really what's been driving that. I think investors are very enthusiastic that as we go through the course of the next 12 months, the economic picture for India is going to look better, not worse. As you mentioned a minute ago, about 12% of the population is fully vaccinated right now. About 18% has had one dose. And obviously, just even having one dose makes a huge difference in hospitalizations. So the trends are going the right way. As you said at the open, really hope we can keep the case count below 50,000 a day, which it's been the last 6 days. So I think there's a lot of positive things happening. I think the government's trying to kind of help with the economy right now without going too overboard.
Okay, Randy, good morning. So, what kind of stocks would you choose? I remember in our last conversation, you had spoken about some of the growth areas like the Pathlabs stocks. Dr. Lal, I think, was a stock that you liked. There's been a deal in that space recently. Is that a space that you still like? Is there something else that you're looking at?
We still like healthcare. I think the comments Lata made earlier about healthcare are also very positive. We like some of the companies that sell into that space. We like Laurus Labs still. We like Apollo Hospital. And we like some of the companies that provide the ingredients for pharmaceutical manufacturing. We like companies like Vinati Organics. So I do think healthcare is still a good place to invest. The testing market still continues to be strong, and that's still an area we would favor. In general, we do still like growth stocks. There are some elements of cyclicals that we like. But we do still like growth until certain areas get going again. Obviously, autos have been slower and the monthly numbers have been disappointing. The estimates I've seen say that they're hoping the industry can get back to about 70-75% of normal in June. But I think for a lot of those stocks, we want to see a little bit of a firming before we start to go more cyclical. So we do still favor growth.
Okay, you'll favor growth. Randy, good morning. What about Reliance? They have a new initiative. They're entering into the renewable energy space in a big way. As an investor, how would you approach that whole initiative by Reliance?
We like it quite a bit. We think renewable energy is going to be just a huge, huge market in India. Electricity demand continues to grow rapidly. Reliance is obviously moving there. We like Adani Power as well. We also like Tata. So that's an area where there's going to be a rapid transformation over the next 20 years towards more renewables. Obviously, India imports a lot of fossil fuels right now. That's going to decrease over time. We think the green energy theme is actually a major theme globally, but especially for the India market. We also like, I know I said we don't like autos that much right this moment, but we do like the actions that some companies are taking there. Companies like Tata Motors is saying that by 2025, they want to have the whole Jaguar line be electric vehicles. So I think the electrical vehicle market is also going to be rapidly growing there. But I think that's a theme investors should be focused on over the next several years.
Okay. Well, what about the flow of funds to EM itself? It looks like there are some worries over Asian growth. The Chinese profit growth was not as much as expected. It appears to have slowed down a bit. And there are here and there instances of resurgence of the virus. Do you think flows to EMs itself is going to be lower? And where is India in the picture? And does that disturb you in terms of investing in India?
India has really been the best Asian market over the last year or so. It's performed very well. We think it's the best secular story, as I've said on your program several times. I think what's driving markets right now is two things. First is that, and the RBI is doing this, just like the Fed. The central banks remain loose, so they are letting the economies and they are letting inflation run a little hot. The inflation number last month for India was over 6%, which is outside of their target band. But I think the RBI wants to keep the economy going. So they're going to err just like the Fed in the US and let things run hot. As long as those central banks are letting things run hot and are increasing the money supply, which they're all trying to do, I think money is going to find its way into stocks, both in India, both in emerging markets, and both in the US. So I do think until that liquidity dries up, one of the places it's going to go is EM. So I continue to like that, and we continue to like equities over bonds right now. Clearly, inflation is something we have to watch. I still think if you can take a little bit of a longer view, let's say a 3 to 5 year view, I think as the Indian economy recovers in the second half of fiscal 22 and into 23, you're going to feel good about owning Indian equities. The market is not particularly expensive if we have the economic recovery we're expecting. It's about 21 times right now the fiscal year 22 earnings numbers, and I think it's about 17 times the out year number. So if the economy can pick up in the second half, stocks are not overly expensive.
Okay. Well, it's always good speaking to you, Randy. You make us feel very good. So yes, it may look expensive right now, but if growth picks up as it is expected to, then it may not look very expensive. Thank you so much for joining us.
Stay safe.